What's going on, apes and apettes? Welcome back to the channel. We have some breaking news to report to you guys. Banks are taking massive losses because of these sanctions that are being put on Russia. That's why you see bank stocks are clapped today. And what does that mean for the MOAS? That means that hedge funds that do business with these banks will now have to put up potentially more margin into their portfolios, because the last thing the banks are going to do is fail because they're lending out their money to these hedge funds and institutions. Everything is intertwined, and I do want to go over that extensively with you guys here in this video. As well as that, we are going to go over all of the specific data you need to know, economic developments that are happening currently, as well as I do also want to go over some data that is coming out this week, and Fed Jerome Powell that is going to be speaking on Wednesday and Thursday. So if you guys find value and hopefully learn something in this video, hit the like button, subscribe to the channel to stay up to date with all of this information. We do deep dives on everything that will make you money, trading strategies, the news, the technicals, everything. We cover it here on this channel, so you definitely want to be a part of it. Give you guys some golden nuggets along the way. As well as that, if you guys want to directly communicate with me, ask questions, join a trading community, all of that good stuff, link down below in the pinned comment to do so for that. As well as all of that, you have some links down below in the description with Webull, Moomoo, and Public to get yourself some free stock, and I do highly suggest you do that because that is, after all, some free money. As far as AMC is concerned for the day, we are sitting at 4.59% to the positive. We were up a little bit more than that, but nevertheless, considering what is going on in the marketplace today, this is a major win. We can see that the American stock market for the Dow is down about 1.25%, S&P down about 1%, and the Nasdaq down about 0.5%. Russell 2000 down 0.33%. So to see a 4.5% positive day on AMC, definitely by any metric of, trying to be bearish, this is a very bullish thing. So nobody can take that away. This was definitely a strong day for AMC. And we know this is likely because we are heading into earnings that is going to be tomorrow in after hours. So people are positioning, people are getting excited, they're buying stock, all of that, which is great. That's what is really causing this move today. I don't think this is shorts covering just yet. If AMC does have good earnings, which they likely will, then that's when I think you do see some shorts that are actually forced to cover, and everything is going to come down to guidance. What does AMC say as far as guidance? How much money are they losing? How much money are they potentially making? When do they expect to turn a profit? When might they actually pay out a dividend? I think those are the key things people are going to be paying attention to upon the earnings report, as well as the earnings call. And that could make AMC go up or down 10, 20%, maybe 30%, depending on what is announced. But I think a lot of the bad news is already priced in because we're only $18 per share when we were just $45 per share in this range back in November. So I do think we're already priced for pretty much a worst case scenario, and I think that is ultimately going to lead to a very bullish earnings, but that is just my opinion. Keep that in mind. Now let's take a look at the option order flows. I'm gonna have to go pull up AMC real quickly. I was looking at SoFi, matter of fact, but we could see the option flow is 97% positive for the day. Those are numbers that you do not see, especially on other stocks for today. Like, you could pull up Apple and it's not a 97% positive order value. Keep in mind, these are not retail investors buying a call, buying a put. These are large trades by institutional investors. Look, the 20, 16, $17 calls for the day, and they're definitely showing a lot of interest in trading the options. 4 orders totaling $1.28 million. Like I said, 97% positive over the past week, 23% positive. So this is definitely a big switch for the day, and comparatively to what we have seen over the past week, if not 2 weeks, not too often you see a 97% positive order value. And like you guys already know, the hedge funds and institutions, they have more data and information than we do. So I like to pay attention to the interesting order flow sentiment here over on Ortex. I also do like to pay attention to the short interest, and that's sitting at 20.45%. Current shares that are sold short of 104.74 million, cost to borrow max of 3%, and the utilization is at 100%. Days to cover at 2.34. So this is looking good. One thing I want to point out is the short interest is remaining relatively the same. Shorts, there's an ego battle that is really going on behind the surface here, and that's why the short interest really doesn't go down depending on what the stock does. If the stock is up 20% a day, short interest either stays the same or goes up, relatively compared to something like SoFi, where their short interest has went from 21%. It was matched up with AMC. Now it's sitting at 17%. So there's definitely that ego battle that is going on here. And the only way out for shorts is obviously quite literally to cover, but they're going to end up taking massive losses, and that's something I want to be very clear about. I don't know how long it is going to take. I don't think March 3rd is this magical day Lou or anybody else has made this out to be. I don't see any factual evidence of anything happening on March 3rd, but I do think that could also be a very bullish day, and I think a lot of people will be excited because people are just buying stock on March 3rd. That's the overall sentiment that I get over on Twitter and in the YouTube comment sections, over on Stock Twits. People are loading up on March 3rd. So I think it could be good, but I wouldn't necessarily be pressuring yourself or pressuring other people or pressuring the stock to start the squeeze on March 3rd. I don't really care how long it takes. If you look at it like, hey, I'll be rich however long it takes, doesn't matter, then you will do just well and you will sleep great at night. You will snore, get your Z's in beautifully. Now, as far as the other data that you need to know, and then we'll get into the more serious stuff. So the max pain is sitting at 1750 for this Friday, and the Stonko tracker data does not show a lot of activity. For in the money calls at 25,000, out of the money calls at 65,000, puts even less activity with 3,400 that are in the money, 47,000 that are out of the money. So not a lot of option activity, but we know that could change around a lot. And by the time we get the Stonko tracker end of, the day updates, I believe they update at like 6 p.m. You get the final numbers for the day. These numbers could look a lot different. And if we do have a bullish day tomorrow as well, or just in general tomorrow, because that's the last day to place your bets before AMC's earnings, and we're all degenerate assholes. So, these numbers could change around quite dramatically. So do keep that in mind. Very important. Something else I do want to point out, and a reason why I think a lot of your more retail stocks like AMC, like SoFi, like Lucid, besides that they are having earnings, and by the way, Lucid earnings are probably coming out right now. This video is going to be posted at 4 p.m. We are almost at the end of the day. But Lucid does have earnings here in after hours if that's something that you invest in. But like I said, a reason why a lot of these stocks are rallying today is because the probability for a 50% rate hike, keep in mind, the higher the rate hike, the more bearish the markets are going to be. This is actually coming down. So yesterday's probability was 24% of a 50% or 50 basis point rate hike, a 0.5% rate hike. Now you're sitting at 8.5%. That's why you're seeing the NASDAQ doing a lot better. That's why you're seeing the Russell 2000 doing a lot better. So that is really good. And the VIX, Jesus Christ, up 13%. That's wild. We're not even down that much. A lot of fear in the markets still, but definitely some money flowing into the Russell 2000 as well as the NASDAQ here today. So pretty interesting information. As far as the data that you guys need to know about, economic data that is coming out, we have Fed Jerome Powell that does testify in front of Congress. That is at 10 a.m. on Wednesday. You have a lot of mortgage data that is coming out. ADP employment change that is coming out at 8:15 in the morning as well. Fed Beige Book, that doesn't move the markets as much, but you never know in this day and age. And then on Thursday, you do have, let's scroll down, jobless claims. You do have challenger job cuts, initial jobless claims, non-farm productivity quarter over quarter, ISM non-manufacturing PMI. That could move the markets definitely. And then as well as that, you do have Fed Jerome Powell at 10 a.m. on Thursday. So Powell's going to be the main kicker here because he has vowed to basically be transparent with everything the Fed is going to do with market participants before the Fed actually does it. So if he wants to change something around like he did in November when he was having one of these, Fed testimonies and said that they're going to start tapering faster and possibly end their tapering sooner. That was a surprise to us. That came on one of these Fed Powell testimonies. So if he does change something up, if he wants to go more dovish or hawkish, it'll come likely on Wednesday or Thursday on one of these testimony days. So keep that in mind. Be on the lookout. If the markets do start to act crazy and you see big moves, that's likely what it is. But as far as the whole banking situation, I want to point this out. Citigroup said it had $9.8 billion in domestic and cross-border exposure to Russia. And if we go ahead and pull up the banking stocks for the day, Citi down 5.4%. Wells Fargo down about 2.5%. JP Morgan down 4.3%. A lot of big down days for the banks across the board, and that is, like I said, a good domino in the right direction. And that's because a lot of these banks have exposure to Citi, but some of these banks don't want to come out and say that right away. Like a bank like JP Morgan, like I've said many times, JP Morgan called Russia debt, basically buying treasury bonds, as bulletproof. Why? Because they have a very low debt to GDP ratio of only about 18%, comparatively to the United States has 140% debt to GDP, and something like Japan has 240% debt to GDP. So it was seen as a lot safer, a lot harder to lose money and to default. At the same time, in 2019, the U.S. Treasury bonds would give you 1.8%, and Russian treasuries would give you 4.5%. So a lot of institutions have a lot of direct exposure to Russia, and I don't think a lot of these banks even really forecast the fact that they might get taken off SWIFT. They might become an isolated nation like Russia, now Russia, Iran, and North Korea. That's the crowd that they're sitting in now. Russia picked their own seat there, but I don't think banks really expected that. Even when the sanctions started, they're like, hey, there's no way we're taking them off of SWIFT. That's what happened. Banks, they were trying to get greedy. They didn't try to sell out of their positions. Now they are facing the pain for that. And this could be another Lehman Brothers scenario, or, comparatively to the bank that went out of business in 2008. As well as a Bear Stearns-like event, a real credit problem, because Russia is pretty much going to zero. Like, you would not invest in North Korea or Iran, right? Hopefully not. You guys are more savvy than that. So that's basically comparatively to what we're seeing with Russia. You're expected to see 70% inflation in Russia. Nobody wants to invest in that. And that's just the honest truth. Look at the currency. Just back here, February 16th, 12 days ago, was trading at 75 rubles for $1. Now it is at 109 rubles for a US dollar. That means the higher this goes, the more worthless the currency becomes, the higher the inflation will be, the more the people will actually suffer, which is unfortunate. But shout out to Putin for that one. And this is like you had your money in a bank account, but now it just lost 50% of its value in a month. Not good. Not good. And we'll just have to wait and see what that does for the actual situation over there for Russia. I do want to show you guys this video because I think it is absolutely hilarious. These Ukrainian citizens have balls of steel, and we're going to end it off on that note because that is all you guys need to know. So let's check it out. They just drove up and threw a Molotov cocktail on a tank. Crazy. So that's going to be all. Thank you guys for tuning in. Brief look at the technicals. It's not all too important at this current moment. Let's go ahead and see. Let's pull up AMC. And we are at a key level in between these two lines. 1775, that's the key level. Hopefully we stay above that here in after hours and tomorrow heading into earnings. If we can get above that key level as well at about 1850, that's looking really good heading into earnings. Not too much else to add. We went over the technicals earlier in the day. Nothing has really changed. MACD is still bullish. If we go ahead and pull up the Bollinger Bands, we're still above the 20-day simple moving average. That is at $17.29 per share. We're at $18.36 per share, so we're over $1 above that. Looking good in all of those aspects. The RSI is also pretty neutral, not really overbought, not really oversold, really what you'd expect after seeing this wave-like motion that we are seeing. So that is going to be all for this video. Hit the like button, subscribe to the channel, and comment down below. Do you guys like these longer, more in-depth videos where we go over a lot more, or do you like the short videos where we just go over a couple things and we wrap it up? Let me know down below in the comment section. Thank you guys for watching. Join the trading community if that's something you want to be a part of. You want to take control of your financial future and your own destiny. That is available for you guys down below in the comment sections. I am not a fan of taking all your money. That's not what it is for. It's very inexpensive. Some of these trades will pay for that cost for 10, 15, 20 years in some cases. So that is going to be all. Get yourself some free stocks down below, linked in the description. Thank you guys for watching, and I will see you in the next one.